Hello and welcome back to my channel. I'm Sarah Edens, a finance coach, author, and wealth mindset researcher, and we're talking today about if you should cut up your credit cards. This is a really interesting point because there are a lot of financial advisors out there who do recommend that you just simply cut your credit cards up, don't use them anymore, and go to debit cards. And while this might be the right answer for you, and I'm not saying that that's not the right route you should take, there are also a couple of reasons to think through before you just cut them up, to think through if that's the right decision. Credit cards, I'd say the biggest problem with credit cards is it's very easy to run up a huge amount of debt with your credit cards very, very quickly. Many of them have credit limits of thousands and thousands of dollars, and then they have some of the highest interest rates, or what's called annual percentage rates, of any loan you'll ever take out on them. Currently, credit card interest rate, or APR, is running about 24%, which is super high for a loan. And then you think if you get thousands of dollars that you're having to pay that on, that starts to really add up. And if you've ever run up a lot of credit card debt, you know how difficult it can be to get it paid off because you've got to find that money from somewhere. And it's just easier to run up credit debt than it is to pay it back off. But if you can be responsible about your credit use, here are a couple of things to think through before you cut those credit cards up. The number one thing to really think about is that having credit open builds what's called your credit history, which in turn is going to help build your credit score. Now, why is your credit score important? And by the way, if your credit score is not very good right now, I've got a video on that I will link to in the description that you can watch to improve your credit score. But why is your credit score important? Well, this is what lenders look at. So banks, mortgage companies, things like that. They're going to look at your credit score when they decide, A, if they're going to loan you money for, say, a house or a car or things like that, something you want to borrow money for. And then it also is a big determining factor in the interest rate you're going to have to pay on that loan. So credit cards are a piece of what builds your credit history, along with any other loans you've ever taken out. So if you cut those credit cards up and close the accounts, then the issue with that is that that isn't part of your credit history anymore. So what I recommend that you do if you're really not going to use your cards and you want to switch to debit cards or cash or something like that, is that you just put your credit cards in a safe place and then just keep the balances at zero, obviously, if you're not using them. And then log into your account every so often and just make sure there's nothing auto billing to that account, because sometimes there will be magazine subscriptions or gym memberships that you might have forgotten about, but they'll still be billing to that card. And so that's a really good habit to get into, of just double checking every month or so and just make sure that there's nothing still billing to that card. But if you just put it away somewhere safe, and even if you're not using it, at least it's not closed, and that won't reflect poorly on your credit history. So that's one thing to think about. Obviously, if you use them and can keep the balances paid off, it's just another piece that continues to build a strong credit score for you down the road. So either way, you can think about what option is right for you. Number two is that credit cards can provide a financial safety net in an emergency. So this is another reason why you might want to just put them in a safe place if you're not going to use them, rather than cutting them up and closing your credit accounts, is that every once in a while, all of us have this happen where we'll have an unexpected big emergency expense, something medical. Maybe you have to take your pet to the emergency vet, a big expensive repair on your home, car repairs. And so it can be very convenient if you've got a credit card that doesn't have anything on it, but has, a credit limit on of, a couple $1,000s. That can be really helpful in a pinch, because then you can put that emergency expense on there and then find a way to pay that off over the next couple of months, rather than having to then maybe go out and take out a very short-term, very expensive loan to be able to cover that, or just be in a situation where maybe you can't pay the bill, which can put you in a real bind, or be trying to, borrow money from family and friends temporarily or something like that. It's just, if you think about your credit card as kind of like a safety net, if you're not using it, but you've got it if you need it, that can be a really good option for you as well. So the same thing applies. Put it in a secure place and log in every month. Just double check there's nothing billing to it. And then you've kind of got that peace of mind as well if you need it for kind of a backup loan for an emergency expense. The third thing to think about before you cut your credit cards up is that credit cards do offer reward points that can help you make money each month. Now, the kicker is if you can keep them paid off, because that's really the thing that I think is very difficult to do with credit cards, is to keep them religiously paid off. So if you can build the habit of sitting down every day or every couple of days and just keeping your bills paid off and keep them paid off and keep them paid off and make sure you're never running balances on them, then it's one thing, because then you can take advantage of those rewards points and actually make money off the credit card companies. Otherwise, the credit card companies will be making money off of you. So it's just really about being able to have the discipline and the habit of keeping the cards paid off and then sticking to your budget so that you're not putting anything on those cards that you're like, oh, pay that later, pay that next month, whatever, and have that kind of baked into your financial habits and then always be running balances. At that point, it doesn't help too much if the cards have rewards points, because the credit card companies are going to make a lot of money off of you in interest. So my money would be on them doing better out of that situation at that point. So it just depends on how you use them. Credit cards are a tool. If you know what you're doing with them, they can be very valuable and very useful in building your credit history, having that financial safety net, and then also using it to make rewards points back off the credit card companies. Otherwise, they can just be a real liability and kind of a pain, to be honest. So you just do what's best for you in your situation and kind of see how you think it's going to best fit into your life. If you're using credit cards, if you're not, if they're too much trouble for you and causing too much financial stress and it's just too hard to use them responsibly, then yes, the best answer probably is to close those accounts and just switch over to using debit cards and cash. So whatever you think is best for you, but that's kind of my takeaway on that, is keep them open, keep them in a secure place, and kind of use them as a safety net if you need them, and give you a little bit of peace of mind that way. Thank you so much for joining me for today's video, and I always appreciate your comments. Let me know how you feel about using credit cards. I'd appreciate to hear from you about kind of if you use credit cards and what your advice is on using credit responsibly and what works best for you, or if you've chosen to cut your cards up. I'd love to hear from you either way. And thank you so much for subscribing and for liking, and definitely give this video a big thumbs up if you enjoyed it. And I will see you again soon in my next video.